Folks, grab your popcorn, because the Fed's latest tightrope act is about to go full circus mode. Lisa Cook, Federal Reserve Governor, just dropped a truth bomb about tariffs, inflation, and employment, and guess what? The government's mismanagement is the ringleader of this economic clown show. Here at Boss Economics World, we're not just here to break down the mess, we're here to call it out, loud and proud, with a sprinkle of satire and a whole lot of stats. So, buckle up, whether you're a finance bro crunching numbers or just a regular Joe worried about your grocery bill, this one's for you. Oh, ladies and gentlemen, gather round as we dissect the latest episode of How to Tank an Economy in 3 Easy Steps, brought to you by your friendly neighborhood policymakers. Federal Reserve Governor Lisa Cook just took the stage at the Council on Foreign Relations, and boy, did she spill the tea, or should I say, the scalding hot inflationary coffee, all over the government's economic playbook. Tariffs are stoking inflation, weakening employment, and threatening the Fed's sacred, dual mandate, of price stability and maximum employment. And who's to blame? Spoiler alert, it's not the Fed, at least, not entirely. It's the government's reckless trade policies, fiscal mismanagement, and, let's not forget, a knack for turning a solid economic recovery into a dumpster fire. Now, before we dive into the nitty-gritty, let's set the stage. On June 3, 2025, Lisa Cook stepped up to the mic and basically said, hey, tariffs are a one-way ticket to inflation town, and they're dragging employment down with them. She's not wrong, folks, and the data backs her up. But here's the kicker, the Fed's hands are tied, thanks to a government that's more interested in political grandstanding than economic stability. So, let's break this down, layer by layer, from the surface-level chaos to the deep-rooted economic sins, and expose how government mismanagement is pushing us toward a full-blown recession. And trust me, we've got the receipts, fresh data, hot examples, and enough satire to make you laugh through the pain. First up, let's talk tariffs, the government's favorite toy in the trade war sandbox. Lisa Cook didn't mince words. Tariffs are increasing the likelihood of both higher inflation and labor market cooling. Translation: they're jacking up prices and killing jobs. And here's the juicy part, she's got the data to prove it. Manufacturing data is already flashing red, with the Institute for Supply Management's manufacturing PMI dropping to 48.5 in May 2025, below the 50 threshold that signals contraction. That's the third consecutive month of decline, folks, and it's no coincidence that this slump started right after the latest round of tariff hikes on imports from China, the EU, and even our friendly neighbors in Canada and Mexico. But wait, there's more. Firms are slashing their capital expenditure plans faster than you can say, trade war. According to a recent survey by the National Association of Manufacturers, 67% of U.S. manufacturers reported delaying or canceling capital investments in Q2 2025, citing uncertainty over trade policy as the top reason. And here's the cherry on top, the Congressional Budget Office, CBO, estimates that these tariffs could add 0.4 percentage points to the Consumer Price Index, CPI, by the end of 2025. That's right, your grocery bill, your car payments, your Netflix subscription, all going up, thanks to the government's brilliant idea to protect the economy with tariffs. Now, let's put this in perspective for the everyday folks out there. Inflation is already running hot, with the CPI hitting 4.2% year-over-year in April 2025, well above the Fed's 2% target. And guess what? Tariffs are like pouring gasoline on the inflation fire. Just look at the steel and aluminum tariffs from 2018, a study by the Federal Reserve Bank of New York found that they increased the cost of production for U.S. manufacturers by $900 million annually, with consumers bearing 80% of the burden through higher prices. Fast forward to 2025, and we're seeing the same playbook, but on steroids. The government's tariff obsession isn't winning trade wars, it's losing the economic war for everyday Americans. Now, let's peel back the next layer of this economic onion, employment. Lisa Cook warned that businesses could alter their hiring plans due to tariffs, and she's not just whistling Dixie. The labor market is already showing cracks, and the government's trade policies are the hammer smashing the foundation. According to the Bureau of Labor Statistics, job growth slowed to a measly 120,000 jobs added in May 2025, down from an average of 200,000 per month in 2024. And here's the kicker, the manufacturing sector, which the government claims to be protecting with tariffs, actually lost 15,000 jobs in the same month. But wait, it gets worse. The labor market cooling isn't just about tariffs, it's about the ripple effects. When firms cut back on capital expenditures, they don't just freeze new factory builds or tech upgrades, they freeze hiring, too. A recent report from the U.S. Chamber of Commerce found that 45% of small and medium-sized businesses cited trade policy uncertainty as a reason for pausing hiring plans in Q2 2025. And let's not forget the consumer side of the equation, with inflation eating into household budgets, consumer spending, which accounts for 70% of U.S. GDP, is starting to wobble. Retail sales growth slowed to a paltry 0.1% in April 2025, according to the U.S. Census Bureau, signaling that Americans are tightening their belts. Less spending, fewer jobs, it's a vicious cycle, folks, and the government's tariff tantrums are the spark that lit the fuse. Here's where the Fed's dual mandate, price stability and maximum employment, starts to look like a cruel joke. Lisa Cook admitted there's rising tension between these goals, and she's right. If the Fed hikes interest rates to combat tariff-driven inflation, it risks choking off job growth even further. But if it keeps rates steady, as it's widely expected to do at the June 17, 2025 meeting, inflation could spiral out of control, eroding consumer purchasing power and dragging the economy into stagflation territory. It's a lose-lose situation, and the government's reckless policies have painted the Fed into a corner. Now, let's get to the heart of the matter, the government's role in this economic horror show. Lisa Cook hinted at it, but here at Boss Economics World, we're not afraid to say it loud and clear, the government's mismanagement is driving us straight into a recession. And no, this isn't hyperbole, the data is screaming it from the rooftops. First, let's talk fiscal policy. While tariffs are grabbing the headlines, the government's broader fiscal mismanagement is the silent killer. The federal deficit ballooned to $2.8 trillion in fiscal year 2024, according to the Treasury Department, and projections for 2025 show no signs of slowing down. Why? Because the government keeps throwing money at politically popular but economically disastrous projects, think tax cuts without spending offsets, infrastructure bills that never get off the ground, and now, a new wave of protectionist trade policies that cost more than they deliver. The CBO estimates that the current fiscal trajectory could add 1.2 percentage points to inflation by 2026, piling even more pressure on the Fed. Second, let's talk trade policy, or should I say, trade warfare. The government's obsession with tariffs isn't just hurting consumers and businesses, it's alienating our biggest trading partners. The U.S. trade deficit with China widened to $375 billion in 2024, despite the tariffs, according to the U.S. Census Bureau, proving that protectionism isn't winning anything. Meanwhile, retaliatory tariffs from the EU, Canada, and Mexico are hammering U.S. exporters. Agricultural exports alone dropped by 12% in Q1 2025, per the USDA. And here's the kicker, the World Trade Organization warned in its latest report that global trade growth could slow to 1.7% in 2025, the lowest since the 2008 financial crisis, thanks to escalating trade tensions. Third, let's talk about the big picture, the risk of recession. The Conference Board's leading economic index, a key predictor of economic downturns, has been declining for 6 consecutive months as of May 2025. Combine that with slowing GDP growth, the Atlanta Fed's GDP Now model estimates Q2 2025 growth at just 1.8%, down from 3.2% in 2024, and you've got a recipe for disaster. And here's the scariest part, consumer confidence, as measured by the University of Michigan's Consumer Sentiment Index, plummeted to 65.4 in May 2025, the lowest since the depths of the COVID-19 pandemic. When consumers lose faith, the economy loses steam, and the government's policies are the ones shaking the foundation. Folks, at this point, the government's economic strategy looks like a toddler playing with a flamethrower in a room full of dynamite. Tariffs. Oh, let's just slap some taxes on imports, that'll fix everything. Fiscal policy. Who needs a balanced budget when you can just print money and call it progress? And the Fed? Well, they're just the poor janitors trying to clean up the mess while the clowns keep throwing pies in their faces. Here at Boss Economics World, we're not just pointing out the obvious, we're screaming it from the rooftops. The government's mismanagement is driving us off a cliff, and the only parachute they've packed is filled with hot air.